Imagine saving money every single month, doing everything financially responsible, avoiding unnecessary spending, building discipline, and still, your money barely grows. That's the reality for millions of Americans today. Most people believe that putting money in a savings account automatically helps it grow, but here's the truth. Traditional savings accounts in the United States often pay extremely low interest rates, sometimes as little as 0.01%. That means if you save $10,000 in a traditional savings account, you might earn only $1 in a year. Yes, just $1. Meanwhile, inflation continues to rise, and your purchasing power slowly decreases. So even though your money is sitting safely in a bank, it's quietly losing value. But what if there was a smarter way to save money, one that still keeps your money safe, but also helps it grow faster? That's where high-yield savings accounts come in. High-yield savings accounts are becoming increasingly popular across the United States. More Americans are switching from traditional savings accounts to high-yield savings accounts because they offer significantly higher interest rates, often between 3% to 5% APY. And the best part? They're considered safe, secure, and low risk. This means your money works harder without you taking on investment risks. High-yield savings accounts offer higher interest than traditional savings accounts. Traditional banks in the USA often offer very low interest rates. High-yield savings accounts can offer around 3 to 5% APY, and they're considered a safe and low-risk way to grow savings. So what exactly is a high-yield savings account? A high-yield savings account is simply a savings account that offers higher interest rates compared to traditional savings accounts. These accounts are mostly offered by online banks and financial institutions that don't have large physical branch networks. Because online banks save money on operational costs like buildings, staff, and overhead, they pass those savings to customers in the form of higher interest rates. Another major advantage is compound interest. Compound interest means you earn interest not only on your original deposit, but also on the interest you already earned. Over time, this can significantly grow your savings. This makes high-yield savings accounts ideal for short-term savings goals, like emergency funds, vacation savings, house down payments, or business savings. To truly understand the importance of high-yield savings accounts, we need to look at the history of savings accounts in the United States. Savings accounts were first introduced in the early 1900s. Back then, banks encouraged people to save money safely instead of keeping cash at home. Savings accounts became popular because they offered safety and modest interest. In the 1980s, interest rates were significantly higher. Some savings accounts offered extremely attractive returns because the Federal Reserve kept interest rates high to control inflation. During this period, savers benefited greatly from bank savings accounts. However, things changed dramatically after the 2008 financial crisis. After the financial crisis, interest rates dropped significantly. The Federal Reserve lowered rates to stimulate economic growth. As a result, traditional savings accounts began offering extremely low interest rates. This is when online banks started gaining popularity. Online banks began offering high-yield savings accounts with higher interest rates. Since they operated digitally, they could offer better returns to customers. Over time, high-yield savings accounts became one of the most popular savings tools in the United States. Now let's understand how high-yield savings accounts actually work. First, you open an account. Second, you deposit money. Third, your bank pays interest on your balance. And finally, that interest compounds over time. The longer you keep money in your high-yield savings account, the more your savings grow. Let's compare traditional savings accounts and high-yield savings accounts. Traditional savings accounts usually offer between 0.01% to 0.5% interest. These are usually offered by traditional banks with physical branches. High-yield savings accounts, on the other hand, typically offer between 3% to 5% APY, and these are mostly offered by online banks. This difference may seem small, but over time, it makes a huge impact. For example, if you deposit $10,000 in a traditional savings account earning 0.05%, you might earn only $5 in a year. But if you deposit the same $10,000 in a high-yield savings account earning 4%, you could earn $400 in a year. That's 80 times more interest. This is why high-yield savings accounts are becoming the preferred choice for smart savers. Now let's talk about some of the best high-yield savings banks in the U.S. Some of the most popular options include Ally Bank, Marcus by Goldman Sachs, Capital One 360, Discover Bank, SoFi Bank, and Amerex Express Savings. These banks offer competitive interest rates, easy online account opening, and user-friendly mobile apps. But many people still ask, are high-yield savings accounts safe? The answer is yes. Most high-yield savings accounts are offered by FDIC-insured banks. The FDIC protects deposits up to $250,000 per depositor per bank. This means even if the bank fails, your money is protected. That's why high-yield savings accounts are considered a low-risk savings option. Now let's talk about the benefits. High-yield savings accounts offer higher interest rates compared to traditional accounts. They are safe and secure. They provide easy access to money. They are ideal for emergency funds, and there is no market risk like stocks or investments. However, there are also some drawbacks. Interest rates can change depending on market conditions. Some banks may limit withdrawals, and high-yield savings accounts are not ideal for long-term investing because returns are lower than stocks or mutual funds. So who should use high-yield savings accounts? These accounts are perfect for emergency fund savers. They are great for short-term savings goals. They are useful for house down payment savings. They are ideal for travel savings, and they are helpful for business savings. Now let's talk about how to open a high-yield savings account. First, choose a bank. Second, apply online. Third, verify your identity. And finally, make your initial deposit. The entire process usually takes just a few minutes. Another important question is how much should you save? Financial experts recommend saving 3 to 6 months of expenses. This amount is ideal for emergency funds. For example, if your monthly expenses are $3,000, you should aim to save $9,000 to $18,000. Keeping this money in a high-yield savings account ensures safety and growth. Now let's discuss savings versus investment. Savings accounts are safe but offer lower returns. Investments involve risk but offer higher return potential. A smart strategy is to keep your emergency fund in a high-yield savings account and invest the remaining money in stocks, mutual funds, or retirement accounts. This approach balances safety and growth. But many people make common mistakes. They choose low-interest banks, they ignore fees, they fail to compare multiple banks, they leave money in traditional savings accounts. Avoiding these mistakes can significantly improve your savings growth. The final key point is simple. High-yield savings account equals safe, higher interest, and smart money growth. If you want your money to grow without risk, a high-yield savings account is one of the smartest financial moves you can make. Your savings should work for you, not sit idle. So start today, compare banks, open a high-yield savings account, and take control of your financial future. If you found this video helpful, make sure to like the video, subscribe to US Finox, comment your favorite bank, and turn on notifications so you never miss our smart finance content. Thank you for watching US Finox. US Finox, smart finance for smart people. See you in the next video.